Oil prices shed more than close to 3% on Monday as scanty details of first phase of trade deal between the U.S. and China raises last week's optimism in UK government to hold budget on November the 6th, less than a week after a possible no-deal departure from the EU. Plus, Egyptian Financial Regulatory Authority approves lowering stock exchange trading fees to encourage investments. Welcome to the program. I am Bisi Adebayo. We begin with the markets in Africa, which appear to be sustaining last week's negative sentiments as all showing index in Nigeria traded sideways at intraday today. The South African rand inched slightly higher earlier, but later dropped to 0.99% at intraday. And all in Egypt, the index plunged 0.11% lower at intraday. The Kenyan burst was up 0.46% on Friday. And in the Middle East, we see the markets reacting to the drop in oil prices as optimism surrounding U.S.-China trade talks increase investors' appetite. The Abu Dhabi index remains unchanged as the Dubai indices rose 0.52% at intraday. Over in Qatar, the stock exchange recorded a 1.16% increase in its index, and the Saudi exchange fell 0.47% also at intraday. All right, let's turn to the UK now, where a recent survey by Deloitte shows prolonged political uncertainty in Britain is forcing finance directors to cut costs and hold off hiring to help companies prepare for an unpredictable year ahead. According to the chief economist at Deloitte, Ian Swart, perceptions of uncertainty are elevated and corporate risk appetite is low as the priority areas appears to be cutting costs and not expansion. The audit of 91 chief financial officers of some of Britain's largest companies showed that a renewed focus on cost control will be a strong priority at the highest level for 10 years. Meanwhile, the UK government is expected to hold the budget on November the 6th, even as the Queen has addressed the Parliament today, saying the government's priority has always been to secure the UK's departure from the European Union on October the 31st. But let's head over to our London studios where my colleague Juliana Olayinka is standing by to summarize these stories for us. But Juliana, I trust you had a great weekend.
I had a lovely weekend. Thanks, Bissy.
All right, so tell us more about the Queen's speech and the legislative agenda of this parliamentary term.
Gosh, well, it's been an extraordinary day in Parliament. It's the start of an extraordinary 7 days, considering that the Ben Act, the date, if there is no deal, Boris Johnson has to ask for an extension, is on Saturday. So there's lots going on, lots of jam-packed information. But the state opening of Parliament did happen today. The Queen, alongside Prince Charles, delivered out what some are calling an extraordinary speech. Some say it was a Tory manifesto. During her speech, she focused on various issues, the top line being law and order, talking about tougher sentences for criminals. There's also going to be some quite serious ramifications for anybody in the UK that's suffering with immigration issues. Also, the environment. There's been lots of climate change activists shutting down London over the past couple of days. So Boris Johnson doing his best to appease those. And then, of course, Brexit. And that's really why there are several members of the House of Commons that think for the first time since 1924, this Queen's speech will be voted down. There are several bills, about 22 bills, including some fiscal legislation, which the Chancellor of the Exchequer, Sajid Javid, has put into that Queen's speech. But some say it's just not going to happen. At the moment, Boris Johnson doesn't have a majority. He had a slight majority, but considering there was some within his party that voted against him when it came to asking for an extension, he's about 44 people down. So at the moment, yes, the Queen's delivered her speech, but there is a lot of focus on whether or not the UK can get a deal before the extraordinary EU summit on Thursday and Friday.
Now, Juliana, let's talk about the Deloitte survey showing prolonged political uncertainty in Britain is forcing finance directors to cut costs and hold off hiring. Now, is that really the way to go?
Well, it's quite a serious analysis, really, because Deloitte, everybody knows them. They're the global accountancy firm. They're considered one of the top four in the world, and they every quarter they have this survey where they speak to the best CFOs or chief financial officers of the top companies in the UK, in the world, really. We're talking about people that run FTSE 100, FTSE 250 companies, and they have been saying, alas, that, Brexit is their biggest uncertainty, and that lots of CEOs and chief financial officers, rather than hiring, they are reducing their hiring, they're reducing their spend. 70% of these CFOs that they spoke to said that they won't be hiring as much as they used to before the crash in 2009. So it's pretty serious. Of course, we have, over the past couple of months, listened to lots of big and small business groups, but, the FTSE 100 and the 250 really control the market. So the fact that they're saying Brexit is their biggest uncertainties, not good at all. And of course, that trickles down into domestic spend, because if you're not hiring, there are not many people spending on the high streets.
All right, so are these uncertainties reflecting in the market? I mean, give us the numbers coming from the equities and currencies markets as we speak.
Well, the FTSE 100 has lengthened its losses. It opened on the red this morning. It's still on the red. At the moment, the all-share is down 0.70%. The FTSE 100 is down 0.55%. And the FTSE 250 is down 1.44%. Sterling had a great week last week. Not great at all today. In currencies, the British pound is down on the dollar by almost a cent at 0.75%. Also down on the euro by 0.69%, and down on the Japanese yen by 0.90% intraday.
All right, Juliana, let's remain hopeful for a bright week. See you again tomorrow.
Thank you.
Cross over to Europe now, where stocks were lower earlier today as traders track developments in the crucial week for Brexit, while details of the partial trade accord between the US and China remain hazy. Orage Bath is standing by from the Frankfurt Stock Exchange for more details. Orage, so China's newest trade figures look dismal. Give us an overview and tell us how the markets in Europe reacted.
Yes, the figures are very dismal. The exports dropped by 3.2% in the month of December, and the imports were down by a whopping 8.5%. And that, I think, shows the impact that the trade conflict is having on China, and it's a kind of reinforcement of effects. Trade conflict, China, world economy, and this spills over also to the U.S. and to Europe, of course. And an important number for everyone also in context with U.S.-China trade talks. In September, the China exports to the United States were down by 25%. So this underscores the necessity that the Chinese, for example, are seeing in striking a deal with the United States. Now, there's been some progress made. The markets in Europe soared on that on Friday. Today, there's a bit of sobriety setting in. We just heard from the trend from London, here in Central Europe and France and Germany with the DAX, but also in Milan, share prices generally on the way down, losing some of those gains, but by far not all that were gained on Friday, because some people are talking today, economists I listened to, of a mini deal, of a partial progress, but being a long way from ending this trade conflict yet.
All right, Orage, we are hearing that Germany will not be blocking Huawei from supplying its state-of-the-art 5G mobile network technology. How is that being talked about where you are?
I think it's taken up with relief. Of course, there are a lot of people who are concerned about safety issues. I see that in my private life, where I'm talking with friends or neighbors about this issue, and they are concerned that there will be some espionage going on. But Huawei has state-of-the-art technology, and Germany sorely needs to upgrade its internet connectivity in some parts of the country. Indeed, in some parts of the city, internet connections are very, very bad, and it's hard to stay competitive. And with 5G, if it's done the right way, with state-of-the-art technology, Germany can move into the next century, if you will, in terms of internet connectivity. And the German government, it hasn't confirmed anything yet. It just says that in a brief time, there will be a catalog released with the security measures. And of course, Huawei, if it wants to get a contract, if it wants to partake, will have to fulfill those security requirements set out by the German government.
All right, we have our eyes on that developing story. But meantime, Volkswagen owns Italian sports car maker Lamborghini, and there are reports that VW will sell the maker of the super fast, super expensive automobiles or take it public. Now, VW has denied this story, but would it make sense to cash in on the unit?
I think it would make sense to get rid of Lamborghini. It doesn't really make a lot of money anymore for Volkswagen, and it doesn't fit into the model mix at all. It's seen as a pet project by Ferdinand Piëch, a man who died this year, a real car guy, and he was fascinated by things like this. He also bought Ducati, an Italian motorcycle company, and he bought Bentley. And the thing is, Lamborghini makes super fast cars, but it's not adding anything to the Volkswagen portfolio. And it's known that Herbert Diess is critical of this. He thinks that everything remaining with VW should have something to do with the core business, units like Porsche, Audi, and Volkswagen. And with money that does come in, it wouldn't add a whole lot to the Volkswagen balance sheet, but it would contribute to investing into e-cars, which needs heavy investing in the next years.
All right, we'll see how all that goes. Thanks, Arish, for those updates, and we'll see you again tomorrow. In Asia, the markets rose across board today as investor sentiment improved. The Shanghai Composite added 1.15%, and the Shenzhen Composite rose about 1.43%. Hong Kong Hang Seng Index rose 0.84% in late afternoon trade, while South Korea's Kospi Index gained 1.11%, closing at 2,067.4. In Australia, the benchmark ASX 200 rose 0.54%. Markets in Japan are closed for a public holiday. And U.S. stock index futures turned lower this morning after China said it needed to have further discussions before it would sign off on the so-called Phase 1 trade deal U.S. President Donald Trump touted on Friday. Earlier on, the Dow futures dropped more than 115 points at the open. Futures on the S&P and Nasdaq were also slightly lower. Meanwhile, the World Trade Organization has given the U.S. the go-ahead to impose tariffs on up to $7.5 billion on European goods after a court decision earlier this month over subsidies to plane maker Airbus. The dispute settlement body of the organization dismissed charges against Washington in order to take countermeasures against the European Union and Airbus-producing countries Britain, France, Germany, and Spain. This comes after a three-man WTO tribunal of arbitrators earlier this month issued a ruling that allowed the enactment of $7.5 billion worth of countermeasures. Let's talk about oil prices now. They are taking a nosedive today as scanty details on the first phase of a U.S. trade deal between the U.S. and China undercut last week's optimism. Brent crude futures dropped to $59.05 a barrel, while U.S. crude futures lost $1.27 at $53.43 a barrel. Both contracts rose more than 3% last week, and that's their first weekly gain in 3 months. And back home, the federal government has begun preliminary talks with the international oil companies to settle a $62 billion dispute over revenue. According to the Minister of Justice, Abubakar Malami, Nigeria has opened a process of engagement between the parties and is waiting to see if the discussions will eventually translate to settlement or to opening a full-blown negotiation process. Most of Nigeria's crude is pumped by Royal Dutch Shell, ExxonMobil, Chevron, Total, and Eni, who operate joint ventures with state-owned Nigerian National Petroleum Corporation. Well, we'll check in with Temple Ashaju at the Nigerian Stock Exchange when we return in a moment. Please stay with us.